Welcome to this week's Wealth Management Digest. The two topics that we'll cover today is first, Wealthfront hits $50 billion in assets under management. And then the second one is LPL launches their W-2 model for high net worth advisors. All right, so let's start with Wealthfront. So Wealthfront announced earlier this week that they hit $50 billion in client assets. They also mentioned that they have now EBITDA margins above 40%, which is pretty remarkable, right? So they're a profitable company that is also growing at over 100% year over year. Now, worth noting that a lot of their growth has come in through their cash products. And Rex Salisbury did some interesting analysis showing that based on his estimates, the revenue that this means for Wealthfront is around $200 million, with about $90 million in EBITDA, growing at 140% year over year. I think this is really remarkable. Just a couple of years ago, everyone was saying Wealthfront's dead, robo-advisors were stupid, it's an awful idea. Well, it turns out if you let these things compound for a while, now they have hundreds of thousands of clients. Even though the accounts are small, they've been able to layer in new products and made their company profitable. So yeah, that's something to keep an eye on as they continue to develop new products. We got to remember, this is how Schwab started, as like a silly idea, discount broker, and over time, some of these silly ideas end up becoming, $100 billion businesses. The other news was LPL launch W-2 model for high net worth advisors. LPL Private Wealth Management is an employee model, and it's aimed to provide the resources and structure that like a wirehouse would provide, with better payout than a wirehouse would. So we'll see what this means for kind of the dynamics between the independent broker dealers and the wirehouses, but LPL being the largest independent broker dealer, that's a pretty big deal that they launched this. That is it for this week. Stay tuned for next week and have a great Thanksgiving.